in context with the US dollar right now. We have seen a significant surge over the course of this week, following on from last week's non-farm payrolls. I'm sure you've seen a number of currencies which have sold off inversely to the US dollar index over the course of this week, which includes, of course, the pound, which broke down yet again this week. Now, if we have a look on higher time frames, I'm on the weekly chart now. I just want to draw your attention to the fact that we have just come up to a weekly trend channel here on the US dollar index, which you can just plot on your chart very simply. You have the weekly zones here where you can see we come back up, rotated towards resistance, the third test on that going back to April here. If we have a look at the US dollar index on a daily chart, it has come up to a major zone that we were targeting, which is a major overhead resistance level, major pivot level, and we're certainly getting in the overbought condition right now. And I think it is really overdue at this point in time a pullback. So it doesn't mean that we're going to have a full-on correction here for the US dollar. It could be short-lived, but certainly I would suggest, following on from the minutes of the FOMC yesterday, and given the spike that we've had today, which is very common to break above the previous day's high after 3 white soldiers pattern, which is what we've seen here on the US dollar, and then start to see a rotation lower. We've also broken above the 11-week highs here as well, and I am expecting in the short term a pullback here for the US dollar. It's very overbought on a lot of our indicators, and if we do see that move, I do see that again in the short term being supportive for the metals here.